know in the chat box. Welcome to our Power User webinar, and this has become a popular series with our users and friends. We feature avid users of HGSI software who share their investing and trading approaches. It's always interesting to see how others invest and how they apply our software to their strategies. Today should be particularly interesting given that our speaker, Dave Steckler, is doing a specialized topic on creating composite indexes with ETFs. It's also a timely topic since we recently expanded our ETF capability in our most recent software release. Our data now includes the component parts of over 400 ETFs. And the software release also made improvements to our database, other improvements. For example, we now have the components of over 180 market indexes. These features are part of our new database system, which is still on track to be fully completed by the end of this month. And if you want to see how the newest release works, go out on YouTube and just do a search under High Growth Stock Investor. George Roberts has done a nice video out there. Now, a little information before I introduce Dave. We expect the presentation to run from 75 to 90 minutes, and we like to keep it flexible so we can answer all your questions. And they will be answered throughout the presentation. We'll have you muted, so please type your questions in the chat box, and Dave will answer them along the way. If you have any questions afterwards, please direct them to me, and I'll make sure they get in the right hands. We are taping this, and you can expect to see a video at the website later today or tonight. And we're also going to put Dave's PowerPoints there. Now, before I introduce Dave, I want to put a plug in for the HGSI seminar that's conducted by Ian Woodward and Ron Brown in Palos Verdes, California. It's scheduled for the weekend of October 22 through 24, and it's not too late to sign up. We have room for more people. And given the challenge of the markets at present, this is a great opportunity for both new users, what we call newbies, and our more experienced users to delve into top-down investing with our two esteemed strategists, Woodward and Brown. So please contact Ian if you're interested in learning more. I have his email address up here on the screen. And then another quick item, Ray Ebert was to present last month, but unfortunately he fell ill, and he's still on the mend right now, but we hope to have him on board within a month or so to talk about how he does weekly trading. And now to introduce our speaker. Dave has had over 24 years of experience as an investment counselor to institutions, individuals, families, and small businesses. For 13 years, he served as an arbitrator with the NASD and FINRA, which is the largest independent regulator in the U.S. He's an accomplished technician, and he's published articles in various technical analysis publications, and he's lectured on techniques throughout the country. He's a former member and past president of the American Association of Professional Technical Analysts, and he's a former member of the Market Technicians Association. Dave keeps pretty busy authoring his daily investment blog, which you can find at www.etfroundup.com. And he also leads the HGSI user group in Dallas. Now, before I hand it over to Dave, I want to take a quick poll at Dave's request. And he's curious to know a little more about you all. How many of you have been involved with buying or selling ETFs? So I'm going to ask a simple question in this poll, and that is, have you ever bought or sold an ETF? And if you could answer that for me, I'll give you a couple seconds, and I'll hand the results over to Dave when I hand the podium over to him, and he can discuss them. And that will also enable him to better tailor his presentation to this audience. Okay, 68% are voted. Where's the other 30%? Okay, got 80% voting. I think we're pretty much there. I think we've got our results. Okay, and now I'm going to share them with everybody. And it looks like a great majority of our audience has bought or sold ETFs. And so Dave can address this as part of his presentation. Dave, you can see these numbers?
Yes.
Good. Okay. Hey, good. And now I'm going to hand it over to Dave.
Hi, everybody. Debbie, the show my screen button is still grayed out, so I don't know if anybody will be able to see anything.
Okay. Let's get rid of the poll.
Okay. Should I click the change presenter key?
Yes, and that'll become you.
Okay. The presenters are you and George.
Okay, let's try this again. Let's make sure that you're changed. You are now the presenter.
No, it's still grayed out.
Huh.
And the presenters choices are you and George.
Okay, let's take a look here.
You have me set as an organizer. Do you need to change me to a presenter?
Yeah, and I did. Let's take a look here. Bear with me. Yeah, I've got you as a presenter, so I'm not sure why you're still grayed out.
All right, let's try this.
Yeah, you're the only presenter right now.
Okay. Folks, I won't be able to see your answer, but Debbie will. Are you seeing a PowerPoint screen, HGSI using index ETFs to create composites to follow market action? Please let Debbie know. I am seeing responses and people say no. Debbie, it's not working.
Okay, let's take a look here. 1 second. Okay. Yeah, I'm not sure what the problem is, why you're grayed out, Dave, because you were definitely... Okay, let's do it again. I popped up as the new presenter, so let's do this. Okay, you are now the new presenter.
Show my screen is still grayed out.
It's not making sense. I've never had this happen before.
Do you want me to log out and then log back in?
Not quite yet. Let's give it...
Okay.
Thank you, everyone, for your patience with this. Okay, I'm going to close the poll, and that might be what's creating the problem.
Okay.
I'm trying to. Okay. See, those are the choices I'm going to try to get rid of it. So I don't know how to get rid of it. Okay, 1 second. Close, manage, close, hide. I've never had the, I've done a poll before. Okay, let's do that.
Oh, now I've got it.
Try, how's that?
Yeah, now I've got it.
Got it?
Okay, folks, do you see the first PowerPoint screen? Okay, people are saying yes.
Good.
Okay.
Sorry.
All right, we got it. Thanks, Debbie. So, all right, well, depending on where you all are, good morning, good afternoon, or good evening, everyone. I appreciate HGSI offering me the opportunity to give this webinar. As those of you who know me know, I really enjoy this stuff, and even more so, I enjoy telling people how I do what I do. So what we're going to discuss today is using HGSI, how we can use index ETFs to create composites or synthetics, if you will, to follow market action. Just a sec, please. Okay. We can use ETFs as an easy way to visualize direction. It's pretty straightforward. In a bull trend, you use ETFs like the SPY or the cubes to follow the direction of the broad market. And in bearish trends, you want to use an inverse ETF like SH or PSQ to follow that. You don't have to use SH or PSQ. There are others, particularly on the bull side, but almost everybody's familiar with the SPY and the cubes, and it makes things easier. If that's what everybody's following, why not follow it as well? Now, you begin by creating two user groups, a long group for uptrends and a short group for downtrends. And on this slide, you can see the proxies that I'm using for large cap, small cap, and mid cap, as well as international. The EAFA, the EFA, the long ETF is EFA, and the short is EFZ. Emerging markets is EEM and EUM. The Russell 2000 is IWM and SBB. The mid cap is MDY and MYY. The small cap, IJR and SBB. The NASDAQ 100, the NDX, or the cubes, and the PSQ. And for the 500, we use the SPY and SH. Now, many of you know how to create a user group. It's really quite simple. But maybe you haven't done it in a while and forgot, or maybe you've never done one. So I'm going to show you how you do it. When you launch HGSI, as you know, you've got the different tabs: designer, charting, warehouse, etc. You click on the designer tab, and then click file, and you click on the add group choice. After you've clicked on add group, you give it a name. Long ETF proxy, it's your choice, whatever you want to name it. Now down on the bottom, you can see here, does everybody see the moving arrow pointer? Can you all see that? I don't know if that's just on my computer or, okay. Down here on the lower left, you see show. You want to click security and market indexes. There are other choices, but obviously we're picking ETFs, and those are securities. For the long, all right, so you can see here, I named a new group, long ETFs, and then I added the long ETFs that I showed in the previous slide, in this slide. Once that's done, you'd click OK, and HGSI will ask you if you want to create an index, and you want to say yes. And you see that right here, long ETFs index. And you do the exact same thing for the short side. You click File, Add Group, you name it Short ETFs or Short ETF Index, whatever you want. You can see it here, Short ETFs. And here are the short ETFs that make up our short user group. So what we've done is created two mirror image user groups, one for the long side for bull trends and one for the short side for bear trends. Now comes the fun part, the chart views. With these user groups, you can use them any way you want. As you know, with HGSI, you can use any view with any user group that you choose. I created two views that I use specifically with these user groups. Doesn't mean you can't use these user groups with another view. Doesn't mean you can't look at a different security or a different index with these views. That's one of the beauties of HGSI is its flexibility. Before we go further at this point, are there any questions that I could answer on creating the user groups? No questions? Everybody is comfortable with creating user groups, etc. Okay, well, if you have questions, please type them out. Debbie will pick them up, and she will pass them along.
Dave, I think we have a question here. 1 second.
Oh, okay.
Let me make sure we... No, actually, we're fine. No questions yet. Fine.
Okay. Okay. So we're going to create 2 user groups. One is the Tsunami %B. Tsunami means there's a 40% or greater up or down change in the %B. And the second chart are Bollinger Bands with a 4-day SMA and the ADX. The real key here is the 4-day SMA. Let's start with the Tsunami chart. Tsunami view, I apologize. As you know, the Tsunami measures a sharp move in either direction in the Bollinger %B. %B is an indicator derived from the Bollinger Bands, which was developed by John Bollinger, and it calculates the current price relative to the top and bottom Bollinger Bands. Does everyone, and if you don't feel ashamed to say you don't know, how many of you are not familiar with the Bollinger Bands? Would you like more of an explanation about the Bollinger Bands?
People can just type in maybe the letter Y for yes.
Yeah, yes, if you'd like more of an explanation. If you don't say no, if you don't answer, just say no. I'll assume you're comfortable with the Bollinger Bands. Anybody who would like a little more in-depth explanation of what the Bollinger Bands are?
Dave, I'm still waiting for some responses here.
Okay. Well, you know what? I'll give it to you anyway.
Good idea.
You get it. You get it as part of the admission fee. What the Bollinger Bands are standard deviation bands plotted around a price of a security. The standard deviation is 2, plus or minus 2. So what you've got, and we're going to see the Bollinger Bands in a few minutes, you have 3 bands, an upper band, a middle band, and a lower band. The middle band defaults to a 20-day standard moving average. You can make that whatever you want in HGSI, but the standard Bollinger Band has a middle band as a 20-day SMA. The upper band is plus 2 standard deviations above that, and the lower band is minus 2 standard deviations. Now, for those of you who didn't take statistics in college or high school, or forgot it all, like I did, the standard deviation, a standard deviation covers or contains a certain percentage of data, all the data within a series. 2 standard deviations contains 95%, it's actually 95 point something, but roughly 95% of all the data in a data series. 3 standard deviations covers 98%. Think of the standard deviation bands, the upper and the lower, think of them as rubber bands. The more they get stretched, the greater the likelihood when a reversal comes, the reversal will be strong. In other words, if a security's price, doesn't matter, ETF, stock, future, doesn't matter, if it hits the +1 standard deviation band, the reversal when it comes, generally speaking, is less strong than if it hits +2 standard deviation bands. And +3 standard deviation bands, which we hit a few weeks ago, when the reversal comes, it's even stronger still. Why? Because the rubber band got more and more stretched, and you're the crumb that's sitting on the rubber band. And the same is true on a minus standard deviation. -1 deviation covers less data than -2, which covers less data than -3. And the more the standard deviation bands get stretched, the faster or harder the retracement or pullback. Now, what makes the band stretch or contract? That's all based upon the volatility of the underlying asset that the bands are wrapped around. When you see an ETF that's moving sideways with very little daily range, the Bollinger Bands are tight, they contract. When you see a strong move, they expand. Strong moves are ultimately met with a retracement. How much, how little, that's a different topic altogether. But that's what Bollinger Bands are. What we look for, what the Tsunami is looking for is one of those strong moves. Okay? What we want to do is capture a move, a retracement, after there's been a sharp move in one direction or the other. And that's what the Tsunami does. It looks for a one-day change in the percent B of 40% or greater compared to yesterday's percent B. Mathematically, if yesterday's percent B was 0.7 and today was 0.2, well, 40% of 0.7 is 0.28. So if we've gone from 0.7 to 0.2, 0.5 is greater than 0.28, a Tsunami down would trigger because we went from 0.7 to 0.2. If it was just the opposite, if we went from 0.2 to 0.7, it's more than 40%, a Tsunami up would trigger. If yesterday's percent B was 0.3 and today's percent B was 0.4, well, that's, we know 0.28, 40% of 0.3 is 0.12. We only went up 0.10. We would not have a Tsunami up because it was less than 40%. Strictly mathematics. Now, the Tsunami usually forecasts the direction of the price move. Usually. Nothing's written in stone. Nothing is guaranteed, particularly when it comes to the stock market. As everybody here, I'm sure, has personally experienced, the job of the stock market is to confuse the maximum amount of people in the minimum amount of time. If everybody's looking left, the market's going to go right. With the Tsunami on HGSI, you watch for the color change, and that's the day of the Tsunami. Now I say watch for the color change. When you program the Tsunami into HGSI, and we're going to see that in just a few minutes, you can give one color for a Tsunami up and a different color for a Tsunami down. People react visually. It's much easier to see a color change than it is to see a number change, particularly if you've got a field of numbers. Pilots know this very well. That's why in commercial airliners, most alert lights are either green or dark, because if something happens and it flashes red, it immediately catches the attention of the pilots. Well, we're doing the same thing with Tsunami. If we have a color change, it's much easier to see that than to manually.
Okay. I think we lost Dave. There he is.
Sorry?
You're back. Okay, we thought we lost you.
Oh, okay.
Yep.
Before we move on to creating the charts, does anyone have questions on the Tsunami?
Yes, we have one question from Frank Anisi, and he's asking about percent B and its calculation, and he's asking, is it standard deviation divided by price?
I'm not sure how HGSI calculates it. If you look at the info section on HGSI, it should give an explanation. Frank, I'm sorry, I can't give you a better answer than that. But the answer is I'm pretty sure the answer is in the information section of HGSI. If it isn't, if you just do a Google search for Bollinger %B, you'll find your first or second search choice should give you the explanation as to how it's calculated. Let's create the chart views. Again, it's very simple to do, but if you've never done one, if you've only used the default charts on HGSI, or perhaps you have created them, but it's been a long time, do a very quick review. It really is simple. You begin by clicking on the, remember you've got designer, charting, warehouse, ranking, etc. Click on charting, click on tools, and click on choose create chart view. From there, you bring up, it would only be one of these. I put two on the same slide to make it easier. First click on window. Excuse me, first click on view and name your view. Tsunami %B, 40% up, down, change. You can name it anything you want. That's what I named it. Dates to show, I pick all. You could use a date range. Whoops. Now, after you've done that, you click on window. And you see you've got new window, add indicator, delete, edit, up or down. You click on new window, and you first enter, and you'd write this in, price window with Tsunami. After you've done that, you'd click add indicator, add price, visual filter backtest up, visual filter backtest down. We're going to see the chart in a few minutes, and you'll see what I did here. Click new window, add, remember you're writing in this name, daily Bongo. HGSI defaults to a weekly Bongo. What you want to do when you add the Bongo is a little box you can uncheck so that it doesn't automatically do weekly data. Normally, I use weekly Bongo signals. Those of you who have been HGSI members for a number of years recall the work that I always call it the Bongo Committee. Me and Gallardi and Manu, Jeff Scott, I think there were one or two other people. I apologize for forgetting the names. We did Ron, of course, Ron Brown. We did a lot of work into researching the Bongo and developing the Bongo, and extensive backtesting showed that using weekly Bongo signals was more effective, gave higher returns, lower drawdowns, and fewer number of trades than daily signals. Having done all of that, when it comes to this view, the Tsunami %B chart with a 40% up down change, if you're using the Bongo for confirmation or non-confirmation signals, daily works much better than weekly. So that's why I've got this name, Daily Bongo, and when you enter the indicator, make sure you uncheck the Use Weekly Data box. And then I always add a volume window. You don't have to, but I think volume is very important. It helps confirm or non-confirm a move. So this is how I created the Tsunami %B with a 40% up-down change window. And this is what the chart looks like. Now, what we're looking at, and all the subsequent charts are going to use this same chart, is I'm in the short. Now, I created these charts a few weeks ago. As you can see from the dates, I created these in early August. When we're all done, we'll go to some live HGS charts or more updated HGS charts to see how these changed. I'm using the short ETF user group, and the security I picked is the shorts ETFs index. One of the things you have to be careful about, catches me all the time too. When you first launch this chart, the index is not the first security that shows up. It's one of the components. So all you do is you click this drop-down box and change it to the index. And here's our view, Tsunami %B, 40% up-down change. Whoops. Okay. Now, what we have is this. This is the index, these price bars. And I use candlesticks because it's easier for me to see. It's visual. I'm a visual learner, so it's easier for me to see with candlesticks. here's the upper Bollinger Band, here's the middle band, and here's the lower band. Now, even though we're not looking at Bollinger Bands in this, we're not using Bollinger Bands in this particular analysis, I've got it up anyway because it just makes it easier for me. Down here we've got the Bongo signal, and here's volume. Notice the two colors up here. Sometimes these color bands match the Bongo signal, and other times they don't. Now, I'm colorblind. I see these two colors as different shades of gray. I don't know what they are. But this color is following a tsunami up indication. And this color is a tsunami down. Now, one thing that HGSI does, very important, when I first started using HGSI, it was confusing. It was like, how could we have a tsunami up all these days? How can we have a tsunami down all these days? The only tsunami day is the first day of a color change. The first day of a color change. HGSI continues using that color until there is a tsunami change. So don't think, oh boy, I know the market was moving a lot, and look, we had tsunamis every single day, up and down. No. It's just the day following the color change of the tsunami. Tsunami up, tsunami down, up, down, etc. The Bongo, and you can look up on the info what the Bongo is. It's very simple to understand. With this view, the Bongo is a confirming indicator. By that I mean as follows. When there is a tsunami change, up or down, within a day or two, you'd like to see the daily Bongo also confirm an up or down. In this case, this color is a Bongo up, and this color is a Bongo down. So, in the case of this down tsunami and this down tsunami, the daily Bongos went down the same day. And the day immediately following, there was tsunami up. And the Bongo changed from Bongo, this color, Bongo red, that's Bongo no. And the Bongo green is Bongo yes. In this case, in these two here, the tsunami indicator and the daily Bongo gave the same signals on the same day. Now, what about here? We were still tsunami up, but daily Bongo went no. So what should you do in a case like that? Well, that's entirely up to you. Some traders don't use Bongo as confirming. They use it as a standalone. Whichever one gives the signal first, that's the one they follow. That's fine. That's entirely up to you. How you trade is up to you. Other traders use the tsunami as the primary indicator and the Bongo as the confirming indicator. So tsunami was still up. Daily Bongo went no. They may not have exited. Perhaps you raised your stop, tightened your stop. Once tsunami went no, when tsunami went down and the Bongo was already down, that's when they exited. What about in a case like right here? We had a tsunami, up, followed by a tsunami down, but the Bongo was green. The Bongo was yes. How you trade this again is entirely up to you. If this is your primary signal, and this is confirming, okay, I've got two signals that are in conflict, I'll just head to the sidelines. I don't want to take a chance. Or it might be, well, a Bongo yes is important, so the tsunami, I'll just ride it out, I'll see what happens, and then the next day we added tsunami yes, a tsunami up. When we had the next tsunami down, it was confirmed by the Bongo, and that was a signal to get out. And here, both a tsunami up and a daily Bongo yes on the same day, and that was your signal. Now remember, this is a short index. When I say go long, it doesn't mean you're going long the market. It means you're going long an inverse ETF. You're actually shorting the market. You'd be buying PSQ, buying SH, or maybe if you want, you could use one of the leveraged ETFs like a QID, the 2 times leveraged NASDAQ 100 ETF. Whether you use the short on the short side, the long on the long side, or vice versa, that's entirely up to you. It's whatever you're more comfortable with. Many traders have difficulty wrapping their head around, wait a minute, I'm supposed to be going short, but this is going up. So what do I do? Just remember, this is short. You're going short. You want to go long a short ETF. Okay, before we go further, I just gave you a lot of information here. Any questions on this chart or how it's interpreted, please?
Dave, we have some questions that are somewhat related, both by Mike McDonald. First is, where did you get those visual filter backtest things? And the second is a tsunami more powerful than a pocket pivot, in your opinion?
Okay. The visual filter backtests are built into HGSI. A lot of people have trouble finding them. When we go to the actual chart, Mike, not the PowerPoint, I'll show you where they are. Don't feel bad. It took me a while to find them too, find them as well. But they're already built into HGSI. The second question, tsunami versus, did you say, was it pivot points or pocket pivots?
Pocket pivot, in your opinion.
Pocket pivots are more of a timing. Now, timing's the wrong word. More of a, at what price should I go long or exit or go short? In other words, if I'm looking to go long something, let's forget the inverse here. If I'm looking to go long X, Y, and Z, and my pocket pivot is at 19.5, then I'm going long at 19.5. It doesn't matter whether or not it hit a tsunami, which actually brings up a good point. So I'm glad you asked the question. The only time a tsunami will fire off is if there is a sharp move in the percent B, 40% or more, like right here. Whoops. Whoops, I'm sorry. Here we go. Right here, a sharp move. Right here, a sharp move, a sharp move. If there is a gradual price move, tsunami will not fire off. And it could have left your pocket pivot point long behind. So the answer to your question is, it's not really a question of powerful. Pocket pivots always pinpoint a price at which you can get in or get out. The tsunami is marking an abrupt acceleration or change from the previous percent B. Totally unrelated to the pocket pivot. It's apples and oranges. Any other questions?
That's all right now.
Okay.
Actually,
So,
wait,
yes.
wait, one final comment from Mike.
Okay.
Keyed it in. One final comment regarding tsunami. Then the sharp move would sound more like the buyable gap up that Dr. K talks about. Like it's
A sharp move usually follows a gap, but not necessarily. If there is a gap, you want to, normally you'd use an opening gap breakout strategy for buying, which typically is buy on a pullback that tests the gap. If you read any of Dave Landry's early books, his first book, Dave Landry on Swing Trading, he talks about his opening gap strategies. I think Larry Connors has written about them. Linda Raschke has written about opening gap strategies. If you Google it, you'll find them. A very, very strong tsunami signal almost always has a gap. But the tsunami in and of itself is not necessarily a gap. So, take that for what it's worth. Okay. Any other questions?
That's it.
Okay. So how do we interpret the tsunami %B chart? And I'm going to be flipping between this screen and this slide and the previous slide. When the price bar hits the lower upper Bollinger Band, expect a price reversal. We hit the upper band. Oh, remember, these are +2 standard deviations. When you look here, this was that move in early August. This hit this top of this high actually was just fractionally below +4 standard deviation. It was a great time to close shorts and go long, or to get ready to go long because it was such an extreme move. As you can see, when you hit the upper band, hit the lower band, you will get a reversal. The question becomes when. You see here, you see here, you see here. You can walk down the lower band. You can walk up the upper band. Remember, these are shorts. So when this is going down, the market's going up. If you went short here, oh, look, we hit the lower band. I'm expecting a reversal to the upside. If you went short here, you got hurt. Remember, the market's going down because this is going up. Oh, look, I hit the upper band. That means the market's going to bottom and go higher. If you went long here, you got hurt. If you went long here, you had your head handed to you. This is the very end of July, beginning of August. Hitting the upper or lower band, it will reverse. We just don't know when yet. As I just said, price may hug the band and move higher or lower before reversing. Wait for the reversal before going long or short. So, what kind of a reversal are we talking about? Well, tsunami. When the tsunami reverses from tsunami down to tsunami up, or tsunami up to tsunami down, right? So here, remember, this is when the market's going down, and we hugged the upper band, and we came down, the market's going higher, coming down. Here's your reversal. Now you can close your shorts or sell your inverse ETFs and consider going long. Answering the question that was asked before, a reversal may not be accompanied by a tsunami. A tsunami is due to a sharp price move, and if the reversal is gradual, there will not be a tsunami. Now, the past few weeks, there's been no such thing as a gradual reversal. The volatility has been breathtaking, absolutely in all the years I've been in the business, all the years I've traded, I've never seen volatility like this. I don't know what in the world I'm going to be saying 2 or 3 years from now, because this might just be a picture, an introduction to what volatility is going to look like in the future. But sometimes you do have a reversal and it's gradual. There's no tsunami. To answer the question that was also asked, many times a tsunami accompanies a price gap. Not always, but frequently. Whoops. Okay, any other questions on the tsunami before we move to the next chart view?
Dave, we don't have one on tsunami, one on %B itself. In setting up the visual backtest, you need to apply a filter. Are you going to explain how to set it up with %B? Okay.
Yes.
Good.
Yes. When we go to the live stuff, I'll show you exactly how it's set up. I didn't want to put too much in the PowerPoint because it would just get bogged down in detail. Okay, the second chart view is I call the synthetic index with Bollinger Bands and 4-day SMA. You can name it anything you want, but the process is the same. You're in charting view. You click on, I think it was Tools, create a chart in the view, give it its name, then click on the Window tab. New window for price. We've got price, Bollinger Bands, and 2 moving averages, and we'll see what they are in a minute. New window, click on ADX, and when you add your indicator, the directional movement, and then a volume window. Okay. Again, we're still working with the short ETFs. It's the exact same time frame. Everything's the same. The only difference is we're no longer using the Tsunami and the Bongo. I like to look at the 200-day SMA. I didn't have that on the previous chart, the Tsunami window. As a rule of thumb, I only go long when something is above the 200-day SMA. I only go short or buy inverse below. But that's not cast in stone. Obviously, you can miss an awful lot of trading opportunities that way. I think that rule works better when you're buying individual securities. Remember, we're using this synthetic index to gauge market direction. Here's the 200-day standard moving average, our Bollinger Bands. This moving average in here is the 4-day standard moving average. Very powerful for short-term, not short-term trading, but short-term reversals. We've got a directional movement, our ADX in here, and volume. Now, ADX is one of the most powerful indicators out there, and I've blogged about it many times. How many of you, it's not a poll per se, just respond, how many of you use ADX to help you determine the strength of a trend? Just yes or no is fine. Always. Okay. ADX was developed by, and now I just blanked out on his name. Doesn't matter. Not George Lane. Wells Wilder. ADX was developed by a technician named J. Wells Wilder, and it measures the strength, not the direction of a trend. This is very, very important. Strength, not direction. If you remember your algebra from high school, you remember the concept of absolute numbers. If you have, and it's those two forward slash signs, if you have +5 and -5, both as an absolute number, they both have a value of 5. The ADX measures the strength of a trend, not its direction. You can have ETF A rising at a 30-degree angle, and you can have ETF B falling at a 30% angle, and if it's over the same time period, they will have identical ADX values. One of the secrets to using ADX is looking at the direction of its trend. If ADX is rising, a trend is gathering strength. If ADX is falling, a trend is losing strength. Now, ADX is plotted on a scale, 0 to 100. You'll never see it at 0. You'll never see it at 100. If ADX is rising, if the direction is rising, is up, and it's above 30, you have a strong trend in play. If ADX is falling and it's below 25, notice there's a difference here. If it's falling and it's below 25, the trend is losing strength. If ADX gets below 20, and particularly if it gets below 15, the ETF or stock or whatever it is you're following is non-trending. No security likes to non-trend forever. The longer there's no trend, the stronger the breakout is when it comes. Because the longer it non-trends, the lower the ADX gets. If you see an ADX down around 10, when the breakout comes, and remember, it has nothing to do with the direction. It could break down. It could break out to the downside or the upside. But when it comes, the lower the ADX and the longer the ADX is low, the harder, the sharper the breakout becomes. And it increases the likelihood of that new breakout being the direction of the new trend. So, I've talked about this many times on the blog. You can look it up there, but it's really very simple. Just a couple of quick rules. ADX above 30 and rising, strong trend. ADX below 25 and falling, trend is weakening. ADX below 20, particularly below 15, no trend. Watch for a trend to emerge. Okay. You can also do the 4-day SMA with the Bongo instead of the ADX. Now, I find it better to use it with the 4-day and the ADX, but it's entirely up to you. You can do both. I didn't create a chart this way, but you could add the ADX an additional window on your chart and the Bongo as well. Okay. So, how do we trade ETFs when we're using the Bollinger chart, Bollinger Band chart with the ADX and the SMA and no Bongo? Just like with the Tsunami chart, when price bar hits the lower upper Bollinger Band, expect a price reversal. And just like in the Tsunami chart, price may hug the band before reversing. So, how do we know when the reversal is for real? Now let's assume we're looking to enter a trade. Wait for a close above the 4-day SMA before entering the trade. So let's go back to the chart here. Now we're looking to enter a trade. So let's look in this period in late April. The short index is going down. That means the market is going up. And we hit the lower Bollinger Band. So if you visualize in a race, you've got the red, just for the car's start, you've got the red light, the yellow light, and the green light. So the market's going up, we've got a red light. We hit the lower Bollinger Band. We've now gone to a yellow light. Let's get ready, get set, go. Here's nothing. Here's get ready. Here's get set to go short. We closed above the 4-day SMA. Go. Whoops. Price may hug the band before reversing. Wait for a close above the 4-day SMA before entering the trade. Now, there's something else you can watch for as well. And this is where ADX really comes in. It's like, okay, what did any of this have to do with the ADX? I put in this dark black line at 15. One thing HGSI doesn't do is you can create, you see the dashed line here, that's 15, but it's easier for me to see a dark line, but it doesn't grow as time goes on. You have to move because this is using the drawing tool. It's up to you. It just makes it easier to visualize for me. But remember what I said earlier. If ADX is above 30, you have a trend. If it's below 25, the trend is losing strength. If it's above 15, if it's below 20, particularly below 15, wait for the trend's going to be will reestablish itself. So, looking at here, hugging the lower Bollinger Band, closed above the 4-day SMA, and ADX went from below 15 to above 15, and it's rising. You could consider going short there. Wait for a close below the 4-day SMA before exiting the trade if the ADX is greater than 15. If it's less than 15, hold. Do not exit. We're not talking about reversing the trade. We're not talking about you a short, close, and go long. We're talking about exiting the trade. There's a difference between exiting and stop and reverse. So let's go back to what we were looking at. Get set, go. ADX is above 15. On this day, it closed below the 4-day SMA. But you can't tell here, but it was ADX was just below 15. Stay, in this case, stay short. Even though, remember, this falls, the market's rising. Even though the index fell, ADX kept falling. It was well below 15 here. There is no trend. This is not a trend reversal. And then the next day, the market fell, the market went up, the market fell, the market fell. All this time, the market is going down. We hit the upper band. It closed below the 4-day SMA. But ADX is well below 15. Don't exit your short yet. And look, the market fell even lower. And then it came back, the market started rising again. We hit the upper band. And the index closed below the 4-day SMA. But the ADX is well below 15. Hold your short. And the market ended up falling much lower. Now, this day, I believe it closed just right here. I believe the ADX, the price closed right on the SMA. This day, the index closed well below the 4-day SMA. And the ADX is above 15. This is the day you close your short. A couple of days later, the market bottomed, went down, and the market kept rising. Okay. So, when the price bar hits the lower or upper Bollinger Band, expect a price reversal. The price may hug the band before reversing, and you want to wait for a close above the 4-day SMA before entering the trade. Wait for a close below the 4-day before exiting if ADX is greater than 15. If it's less than 15, hold, do not exit. Okay, questions on this technique before we go further, please? Yes, the PowerPoint will be available.
Yes.
Not on the website. I'm going to send it to the list. What I'm going to be sending to the list, to the email list, are the PowerPoint, the chart views, and the user groups.
We'll also have them at the Learning Center on our website with a video of the session.
Okay.
You see the couple more questions here, Dave. Can we take them right now?
Yes.
Somebody's asking what level is ADX to enter, just to recap.
It's right here on the screen. Entering?
Yeah, for entering, yeah.
Okay, let's go back to the chart. Let's go back to the chart. we're out. Whoops, that's the wrong chart. There we go. We're out, or we're long, and we're getting ready to go short. ADX is above 15. As a rule of thumb, Mike, you want ADX to be above 15 before you enter. Usually, if you've had a reversal from upper band to lower band, the ADX will be above 15. Not always, but usually. I don't like entering a trade when ADX is below 15 because it could keep hugging a band and the trade could just move against me.
Dave, Stephen Gerwitz wants to know how you add in the ADX line.
I'll show you when we do the live. What you do is when you're on the chart, up here on HGSI, you've got your icons. One of them is a tool icon. You click on that, and one of them is just a drawing tool. And then I just make it thick, and I just draw it over on the 15 level. I'll show you when we go to the live charts.
And lastly, where does the ADX of 30 come into play? You may have mentioned that.
ADX of 30 has nothing to do with this. I was just giving you the general rule. It's very rare that you'll see an ADX that high with these indexes. That was just a general rule when doing individual ETFs or stocks. And in retrospect, I shouldn't have emphasized it so much because, gee, this only goes to 21. ADX, as far as these indexes are concerned, the magic number is ADX 15, above or below. Trading individual ETFs or stocks, that's where 30, 25, 15, 20 comes into play. Okay, now, this is the chart we looked at, Bollinger Bands without the Bongo. Now, what about trading the Bollinger Band chart with no ADX and with the Bongo? Some people don't like to use the ADX because it's confusing to them. That's fine. We begin the same way. When the price bar hits the upper or lower Bollinger Band, expect a price reversal. If you're using the daily Bongo signal, it can lag by a day or two before it color switches from Bongo yes to Bongo no or vice versa. You can re-enter on a reversal through the 4-day SMA that doesn't touch the upper or lower Bollinger Band. You only do this with the Bongo. You can re-enter on a reversal through the 4-day that doesn't touch the upper or lower band if Bongo confirms direction. So let's go back to the same time period, back in late April, early May. We hit the lower Bollinger Band, and the market's going up, and the index closed above the 4-day SMA, and on the same day, or it might have been the next day, the Bongo switched from Bongo no to Bongo yes. There's your confirmation. We can have a situation, now if you look at right here, there was a reversal. We never quite hit the lower Bollinger Band. Came close, but didn't quite hit it. Close above the 4-day SMA. A day or so later, remember the market's now going down, a day or so later, it went to Bongo yes. You can enter here. You can enter here. I only use this, you can enter without touching an upper lower band when I'm working with the Bongo. I don't do it if I'm using the ADX. Now, it's important to note, and I've been showing you the short ETF all this time. Here's the long ETF. And in this case I showed it with the Bongo because it's visually easier to see, but they should show opposite each other within a day or two. In other words, on the short chart, the day that the Bongo goes from no to yes, on the short side, the long should go from yes to no. These should be inverse with each other, give or take a day. Not always necessarily going to be the exact same day. If they're not, if you start going more than a day or two and these don't match, something's wrong. Either you've got a bad symbol, you've got a bad data tick or bad data, or something is wrong. But these should be mirror images, inverse images of each other. If you were using the ADX, they should be flipped. If ADX is high in one, ADX should be low on the other. Actually, I said that wrong. I said that wrong. Because ADX measures trend, not direct, strength of trend, not direction. Your ADXs should be similar because they're both measuring a trend or a lack thereof. It's only the Bongo that goes yes or no, not the ADX. So let's do a brief summary. I'll answer questions and then we'll go to live charts. The composites give you a quick visual summary of market conditions. You're looking at the 7 major index ETFs for large cap, mid cap, short cap, and international. And note, this is just equities. I don't include, we're not doing a lot of bonds. You don't see TLT or TBT or anything like that. These are just equities. You wait for oversold conditions to enter a trade. For example, the Bollinger Bands touch and reverse, or the Bongo changes from red to green. And you wait for overbought conditions to exit the trade. Same thing. Bollinger Bands touch and reverse, or the Bongo changes from green to red. Use the 4-day simple moving average cross. Watch price cross the SMA with a strengthening ADX. ADX is above 15 to confirm the trend change. Before we go to the live charts, and I can answer some of the earlier questions, are there any other questions on what I showed you this afternoon?
We don't have anything right now, Dave.
Okay, then let me get out of this and go to HGSI. Let me find HGSI. There we are.
While you're doing that, if
Sure.
you can, Dave Gaddis is asking if these techniques are good for individual stocks.
Yes. Yes, they are. Your ADX values will be different, but in other words, they might go as high as 30, 35. But yes, that's one of the nice things about this technique. You can use it for individual stocks. You could use it for mutual funds. Now, this is what I was talking about earlier. When you first bring up this view, notice this is showing ProShares Short Midcap 400. It's not the index. You have to go to the index. Where we were looking at in the PowerPoint ended around here. But now we're here. Okay. Now, let me answer some of the questions that came up about creating the chart. Right-click on the screen, Edit Current View. Whoops. And this isn't the chart that I want. This is the chart that I want. Here's the visual filter backtest. Now, where is it? If you click on filters, remember these are all in alphabetical order, you've got a huge selection of VFB. And the one you want is VFB BB, Bollinger Band, %B, 1-day change plus 0.40. That's for the up, and down here you see minus 0.40. That's for the down. So this was the up, and here you can see the minus 40 is the down. So that's where we get the VFBs from. There was another question that was asked that I said I'd answer when we got to the live charts, but I've forgotten what it was. Could somebody refresh my memory, please? We can go back to the questions. I assume it was in there.
Yeah, I'm not sure what that was, David.
Let's see. I'm looking through the questions.
Yeah.
Well, whoever asked that question, are you going to explain how to set it with point back test? You need to apply the filter. Okay, that's what I just did. The VFB. Whoever asked the question, please ask it again. I said I would answer it later. And I don't remember what the question was.
Was it on the ADX lines?
Yes, it was. Thank you. Thank you. Let's change
Steve Gerwitz.
Let's change the view. Okay. So, Steve, were you talking about this black line here? Is that what you're asking about? Or this dashed line at 15?
Give him a second. Give him a second to type
Okay.
something. Yeah, the black line.
Okay, very simple. You go up here, annotation, and click on. There's your. No, that's not it. Extended line, and I just made it dark, and you just draw it in, and there you go, and that's how you do it.
Frank Anisi says he likes the ADX setting of 8 instead of 14 to gain more sensitivity. Is he sacrificing anything? And then Steve also wants to know about the blue line.
This blue line?
Mm-hmm. I don't know.
Okay. When you, let me answer the second question first, if you don't mind. When you first set up, actually, I'm glad you asked the question. When you first set up the ADX, normally you've got 3 colors or 3 lines. Good luck interpreting that. This is DI plus minus and the ADX. All I'm interested in these views are the ADX. So I change these lines, these DI plus and DI minus lines, to invisible. These 3 lines are invisible, and all I've got is the ADX. What DI plus and minus are doing are telling you what the direction of the trend is. When DI plus is above DI plus is 10 and DI minus is 5, you've got an uptrend. If DI plus is 5 and DI minus is 10, you've got a downtrend. Okay, I don't need the DIs on the chart to tell me there's an uptrend or a downtrend. I can just look at the direction of the chart, the direction of the index or the ETF or the stock or what have you. All I'm interested in is the ADX. So that's why all you see here is a blue line. And of course, you can make that color anything you want. There was the question of, can you use ADX 8 instead of 14? You can do whatever you want. You'll find a little more whipsawing with a lower ADX number, meaning you'll get in a little faster, out a little faster. One of the reasons I liked 14 is because when ADX is below 15, you're pretty trendless. You're kind of chopping around. If you made ADX 8, every time you got a crossover, you could be in, out, in, out, in, out, in, out. And depending on whether you had gaps that day or what have you, you could end up being chewed up as the trend keeps reversing on you and you're getting out, you know, a day too late, something like that. I find ADX at 14 is a happy medium. So we're back to the short ETX index. Now just let's change it to the long index just so we can see how it looks or looked. It looks just opposite of what the short was. You can see, now I did not draw in 15 here, but 15's way down here. You can see that's 16. 15's way down here. Yes, Virginia, we had a strong trend, a strong downtrend. ADX is rising. Okay. Did I want to go long? Well, I hugged the lower Bollinger Band. I closed above the 4-day SMA. ADX is below 15. Yes, you could have gone long there. Where would you have gotten out? On this day, okay, we closed at 63.36, and the 4-day was 63.58. We closed below. We'd want to get out. Unfortunately, there was a huge gap down the next day, and you would have taken a big hit. In fact, had you gotten in here, you would have lost money because of this huge gap. Okay. Now, actually, this also brings in a good point as well. Because I'm not using the Bongo here. Okay, I crossed back above the 4-day SMA. Should I have gone long again? I mean, the ADX, look, the ADX has got up to 40. The answer is no, because we did not hit the lower Bollinger Band. Yes, the market went up, and yes, the market came back down. If we looked at, if we're looking, well, I don't have a chart made up, but if we put in the Bongo, then you could go long through the 4-day SMA, even though we didn't hit the lower Bollinger Band, if the Bongo confirmed it. If the Bongo switched from red to green, then you could have gone long. You can use this. Whoops, I'm sorry, that was on the S&P 600 fund. It works the same way. But yes, you can do this with an individual ETF, as we just saw. I mean, look, here's the S&P 500. So we're not looking at an index, we're looking at an actual ETF. It's going to work the same way. It's going to work the same way in terms of the analytical techniques, where you get in and where you get out. You did not use the 4, but you would just add it to the main chart and have a unique color code. I'm wrong. Ignore the question. Okay. Any more questions or any other questions on these techniques that I can answer for you?
Yeah, Dave, we have two. One is how do you select, I'm sorry, what ETF do you actually trade, from Jim Quinn. And Dave Barato, I think it's more a comment. You listed SBB twice for the short ETF. Did you mean RWM?
Well, let's take a peek. Short. Are you talking about on the slide, on the PowerPoint slide? No, Mike, it's not Miller time yet. The person who asked the question, were you referring to the slide?
I'll wait till he responds. He asked to just,
Okay.
yes.
Yes, I don't, let me take a look at that. I don't remember seeing it. If I did, it was a mistake, but let's double check.
Yeah. And then again,
oh, you're right. Yes. Thank you. I'll correct this before I send it up to HGSI. I think that should have been RWM. I think that's the
yes,
short.
RWM. Yeah.
Yes. So I apologize. I'm glad you caught that. Thank you very much.
Yeah, and again, Jim Quinn is interested in knowing what ETF you actually trade.
That is an excellent question, and I will show you. And I'm going to show you using HGSI too. How about that? Okay. One of the ways to trade is to trade on strength. And you want to buy the strongest or short the weakest. Well, the easiest way to do that is click on the ranking module, and when it's done doing its thing, whoops, go to user group, and let's use the long ETFs. Now, with the ranking module, you have the option of using any of these types of relative strengths. In fast, slow, wild or RSI, percent change, comparative, RS. My trading style is primarily swing trading, mainly because moves that used to take years now take weeks, and moves that used to take months now take just a few days. Time has gotten very, very compressed thanks to the high-frequency traders and some of the other people playing games in the market today. I like a 3-week percent change on the RS. Again, this is me. It doesn't mean it works best for you. So what I'm looking for is, okay, I want to go long. And now this is yesterday. And what has the, now you can use, if you want, raw RS, or you could just use the RS rank. I'm an old IBD guy, so I'm just used to seeing the RS ranks. And okay, the cubes have the highest relative strength. So if let's say yesterday we had the signal to go long. Okay, well, you're not going to see it on your screen now, but looking at the market today, the NASDAQ, the Dow is up 2.2%. The NASDAQ is up 2.78%. And let me go to IWM. IWM is up 3.56%. And the cubes are up 2.33%. So, I mean, I like, even though IWM is up a lot more than the cubes today, I like to pick from the top 1 or 2 in terms of the relative strength rank. Those should be the strongest of the groups. Now, today it wasn't, but we didn't just get the breakout yesterday, so we've got some follow-through from the other day. But I believe that answers your question, which one I like to pick. And sometimes if I'm feeling really strong about a move based on other analytical techniques, I'll use the leveraged ETFs. Instead of QQQ, I could buy QLD. Or if I was going short, instead of PSQ, it could be QID. Other questions that I could answer?
Yeah, Stephen Gerwitz is interested in knowing what parameters you use for the Bongo.
Ah, the Bongo. Let's go to a Bongo chart. This has nothing to do with what we're looking at, but it's where I've got the Bingo Bongo RSI. Okay, let's look at the Bongo. Bongo is, I use the default values you find in HGSI, and they're default because those are the values that the Bongo test group found worked the best. A 9-period moving average with the RSI in the order of 8, 14, and 19. Just use the default values. Oh, this is what I was talking about earlier. You see, when you apply Bongo to a chart, it defaults to always use weekly data. When you're doing the charts I created today, unclick. And that way, it will use daily data if you're looking at a daily chart and weekly data if you're looking at a weekly chart. So these are the values that I use for the Bongo, the default values that came in HGSI. Any other questions that I'd be glad to answer for you all?
Nothing right now.
Okay then. This webinar will be on the Learning Center or George said within a couple of hours. And, oh wait, there's a question here. Dave, are you teaching any of the classes? Oh, I have no class, so I can't teach class. But am I going to do another webinar? I imagine I will eventually. I just don't know what it'll be or when it will be.
Yeah, and also, yeah, we'd love to have Dave come back. There seems to be a lot of accolades out here for your session, Dave. And in fact, one question that was asked a few minutes ago is, are you going to the seminar in October? Will you be there?
No, no,
okay.
I am not, unfortunately. I was there a few years ago.
Okay.
Perhaps the one in March, but I will not be there in October. I'll be there in spirit, but not in body.
Okay, and Steve Gerritz just asked, can you, I think we have a few minutes because we didn't start exactly on time. Can you show how to set parameters for views, filters, and Bs, what's B?
You talk about the percent B?
It says VFB. I don't know, VFB.
BFB?
I'm sorry, V is in Valentine, VFB.
Oh, the visual filter band.
Okay.
Okay.
I thought that was views and filters.
Sure. What you do is, I'll tell you what, let's just add one, okay? And I'll show you exactly how it's done. In fact, I'll just add a duplicate. So add a new indicator, and it is the, I gotta find it. I know you're here somewhere. All right, hang on. I went through this last time too. Oh, an indicator. Visual filter backtest, and we'll call this webinar. And then use this filter, click on filter, user filters, and go down to the V's, and you want to find the VFB BB plus 40. Let's change this webinar up. Webinar. Okay, and okay. Make sure, okay. Alrighty. Oh, I should have put it in a separate window. That's why it's not showing. I apologize. All right, give me a minute, please. Okay, new window. VFB webinar. Alrighty. Now we add the VFB and use this filter. And we go down to the VFB, BB, 0.40, up. And I'll move this down. Okay. And there it is. Now, one thing I didn't do is fill in colors, etc., etc., etc. But you can see how these, I've changed the colors, but you can see how these colors line up with these here. And you can change this from this color to this color, etc., and I'll show you how. You just go to click on color, and you just change it to whatever you want. Again, I've got to use colors that are a little different because I'm colorblind, but that's how you do it. So, any other questions I can answer for you?
Dave, a software question. If you add an indicator to your view and then change the parameters, like in Bongo Weekly, does that change cascade throughout HGSI everywhere where that indicator is used, or does it just stay with that view?
It just stays with that view. One of the things that you should do, I didn't do, I should have, this just says Bongo signal. I know normally it's weekly. In fact, you know what? I'm going to change it right now, and I'm going to change this to, whoops, the current view, Daily Bongo, edit, and that should say Daily Bongo. Okay. Okay, well, it says, oh, here, I did it in the wrong place. It should say Daily Bongo signal. And this way I know it's a daily Bongo signal, not a weekly. But to answer your question, any changes you make apply to that chart only. It's not a default change throughout the system, not in charting. Any other questions?
No, and I think we're at our end of time here.
Okay, I want to thank Ron and Ian and George for giving me the opportunity to speak to you all, and I'm glad everybody came. I will be emailing up the charts, the views, the PowerPoint, etc. to the email list. And if anybody has any questions, feel free to send me an email. FYI, I'm going to be on the road the next couple of days, so if I don't get back to you until over the weekend or next week, please don't think I'm being rude to you. Except for a couple of you who I want to be rude to, and you know who you are. So, okay, everybody, thank you very much. I appreciate the opportunity to talk. You all have a good afternoon.
Thank you very much, Dave. Great presentation.
Thank you. How do I get out of here, Debbie?
I'm going to exit for everybody.